Welcome to another S&P 500 analysis. Today is September 25th, 2021. Last week, we saw the S&P 500 had a fall and it bounces right back. So is the storm actually is over and it's getting ready to push up to another new all-time high? We'll take a look at it in this video and see what the price action is telling us and also what the sentiment and internal are telling us. So stay tuned. So looking at this weekly chart here of the S&P 500, last week the range was 159.5 points. So that is quite of a hefty range there. And unfortunately, most of them is on the downside and scared the heck a lot of market participants, and a lot of people will start calling for a crash and all those kind of good stuff there, right? Especially the bear. For the week, the S&P 500 actually had a gain of 22.5 points or 0.51%. And also, even though that it did dip below this 10-week moving average, but it actually closed near it. And also it broke down from this wedge here, and that kind of got a lot of the bear and also people that is looking on the downside really excited. Looking at this weekly trend here, it is still inside of this channel, and we are seeing a continuation of one-time framing down. So there is this possibility of maybe a little bit more downside, but in the meantime, we'll just be a little bit more cautious and continue to watch to see what a break below this low here on this weekly chart, which is somewhere around 42.33 on the S&P 500. And essentially looking at this trend line here on this channel, you see would it come down and test this bottom of this channel here, somewhere around this 4200 level. Now let's go and take a look at the sentiment and then internal and see what they are telling us. The VIX closed the week at 17.75, so it got back below the 20 level after it was elevated up at the 25 area. It was up at 25.71 on Monday when we saw that drop. Also, the put call ratio was up at the 0.82 area. And right now it's back down to 0.69 below this 0.75. So apparently the market participants are feeling a little bit more complacent and putting a little bit more risk on once again. The S&P 500 was up 6.5 points on Friday, about 0.15%. But the up-down volume ratio was actually in favor of the down volume, and also there were 597 more declining issues than advancing issues. But we did see the new 52-week high outnumber the new 52-week low in the New York Stock Exchange by a margin of 32. And as one would expect based on the daily advance decline, negative divergence on Friday, we're seeing a negative divergence on the cumulative AD line versus the S&P 500. And looking at the Nasdaq market, the Nasdaq 100 closed up 13 points, or 0.09%. It also have a negative divergence with the up-down volume ratio in favor of the down volume by a ratio of 1.05. And there were 746 more declining issue than advancing issue in the Nasdaq market on Friday. The 52-week high outnumbered the 52-week low by a margin of 13. There were 98 new 52-week high and 85 new 52-week low in the Nasdaq market on Friday. And again, we're still looking at this negative divergence in the cumulative AD line in the Nasdaq market versus the Nasdaq 100. So let's go and take a look at the price action of the individual indexes and see what they are telling us. The S&P 500 on this daily chart here, remember during the midweek video, I was talking about the possibility of coming up and looking for the potential resistance somewhere around this 4450 area. And if it could break through this 4450 area, then we're essentially looking for the possibility for this to boost itself up to this 4546 or the high, the all-time high. Remember, we still have that Globex all-time high from the E-mini S&P 500 that we're waiting for it to get tagged. So we're still monitoring for the possibility for the S&P 500 to put in a new all-time high. But before that, there are a couple scenarios that we are watching. One is that for this rejection at 4450, and if it get rejected at this level here, essentially this trend line And we're essentially looking for this thing to retrace back to this balance area and possibly come down to this 38.2 near the 42.46 or the 42.55 level. Remember, we have this Fibonacci retracement now. We kind of readjust that, and on Monday it came down, almost tagged this 50% retracement level, and then it broke out the 618. So when we see a price action that break out of the retracement zone, the Fibonacci retracement zone, there's a good chance that it could make itself back up to this 100% level here. So that is not unexpected for us to see that, because we are waiting for that E-mini S&P 500 all-time high to get tagged from the Globex market during September the 3rd. Okay, so we're still keeping an eye on that. But again, we could see a little bit more downside on the pullback if this low doesn't hold. And for the Nasdaq 100, we're essentially looking for this gap to get filled on midweek video, and we're saying that if it get this gap fill and possibly move up, then we're essentially looking at this trend line as a potential resistance here, and see if we get a rejection and pushes back down. Right now, it's still hovering around this gap area here, so we're going to be watching to see what it continue to move itself up to this 15,500 area, and see what it get a rejection from this trend line. If it doesn't, then we're essentially looking for the Nasdaq 100 to continue to push up and test the high up here. But if it does get rejected, then we're essentially looking for this 141 extension on that Fibonacci retracement at this 14,850 area. Right now, it's basically sitting around this 161 at 15,233 area here. And for the Russell 2000, we're watching this trend line to see would it get rejected at this level here, somewhere around 2230 area. As you can see, on Thursday, it broke to it and push above it. And right now, it's putting an inside candle here. We'll see would it be able to continue to push up to this 2297. Remember, this is one of the level that's the 2297 is one of the level that we've been watching for a while to see would it be able to recapture this and then push through this balance area, the top of this balance area at 2317. But if it comes back down, then we essentially are looking for the possibility of retracing back down and test this 2134, the lower boundary of this balance area, for possible support. And for the Dow Jones Transportation, we finally saw a little bit of a bounce and got back above this 14,242. But there is still this trend line that they have to contend with somewhere around this 14,600 before it could come up and try to recapture the 15,000. So we're going to see what it be able to hold above this 1442. If it doesn't, we're still looking for the Dow Jones Transportation to work itself down to this 13,656. And for the Dow Jones Industrial, remember, we're also watching for this gap to get filled. And as you can see on Thursday, it came up and filled this gap. And also it pushed through this little bit of a downward trend line resistance. And right now, we're basically watching would it be able to come back up to this top of this balance area, somewhere around 35,150. So we're going to be watching to see would it be able to continue to move up. If it doesn't, then we're essentially looking for retracement back down to the lower boundary of this balance area at 33,800. Looking at the SPY, the ETF for the S&P 500. See, on Monday, it dipped below this value area here, this composite profile value area, and immediately bounced right back. So you can see that it is finding acceptance inside of this value area. It is sitting right here at this composite point of control, somewhere around this 443 area. There's a zone up here at 445, 446. We'll be watching this high volume zone, this little high volume node here around 445, 58 area. So if it could push through this area here, then we'll watch the SPY to move itself up at this 448, 66 or 449 area. We'll be watching this value area high, this composite value area high. And for the QQQ, the ETF for the Nasdaq 100, you see it came down and found support, or essentially a little bit of a rejection here at this low volume area, and bounces right back up. And here's the composite point of control here at 356. You see that it is coming back into this high volume area here, somewhere around 372 and 376 here. So right now, we're going to keep an eye on this value area high at 374 to see would it get rejected back down and pushes back down. If it does, then I'd be watching for the composite point of control to get retested once again. And if it doesn't, then basically looking for this thing to break above this trend line and move up to this zone here at 376.38 and possibly break this zone and come up to this 379 and 29 area to try to get back into this upper zone. And for the IWM, the Russell 2000 ETF, you can see that it actually came down to this value area low and got a nice bounce up back up and got to this point of control. Right now it's got a little rejection at the upper boundary of this balance area. So we'll see, would it be able to continue to move back up and get above this composite value area high and up at move up to this 227, 228 area. But if it's unable to get back above the value area high, which is somewhere around 225.40, and come back down to this composite point of control at 221.81, and it is unable to hold that, then I'd be watching for the IWM to retrace back down and possibly retest this value area low at 216.70 and even come down to this 214.45 in this balance area that I mark off. And looking at the 10-year yield, you see that after Thursday, the announcement on Friday that the 10-year yield really came up and it moved about this 1.4 level. Right now, it seems like it could be headed at this 1.5 or 1.52 level up here that I have on the chart. So we'll keep an eye on this because right now with the Fed announcing that they will start tapering relatively soon and also projecting 4 interest rate hike between latter part of 2022 to 2023 that will push the rate up to this 1.8% level. That could move this thing up possibly to this 1.5 level in the near term. So just keep an eye on that. So with the interest rate going up, and you see the dollar also making a move back up as well. Remember, we're still watching the US dollar to confine in the zone here, 92 and 94. So I'm still looking for the US dollar to possibly move up to test this 94 area before it pushes back. So that's basically what I'm watching. If it comes down, I'm going to see this 92 level to see what it be able to hold. Now, typically on crude oil with a strong dollar, crude oil would be, the price would be a little bit of a little bit depressed, but right now it seems to be a little bit of a supply, demand in play here. So, but we still are looking for the crude oil to come up to this zone here and tag this area somewhere around 75. And I wouldn't be surprised that it might even go to the 75 and come up to this 76.98 and possibly up to this trend line here. And there are talk that people are looking at $80 a barrel for the crude oil. But right now, I'm still keeping an eye on this 75 area. So silver came down to this 22.75. Seems like it might find a little bit of support here. If it does, I'd be watching for it to come up to this trend line somewhere around 23.65 area and maybe get rejected back down and pushes one more test on this 22.75. And if it doesn't hold, then I'd be looking for this thing to continue to move down to the next zone somewhere around this 1960 area. And here on gold, remember last time I was talking about the possibility of this inverted head and shoulder, although that would be a bullish type of a pattern. I'm still looking for gold to come down and retest this area here between 1716 and 1677. But if it does, find a low support here at this level here, 1751, 1752, and decide to push this back up and break above this 1826 or 1846, then yeah, we could see this inverted head and shoulder could be in play and possibly push it up to the 1923. But right now, I'm basically still watching go to pull back a little bit more and retest these lows down here, possibly at this 1677 once again. And it's very crucial for it to hold this 1677 if it does come back down. Otherwise, if it doesn't hold, then we'd be looking at gold possibly move itself down to this 1466. Now let's quickly run through the different sector here. First, start off with the TLT. That's basically the 20-year plus bond. And we essentially was looking to see what would be able to come up here to this 154. As you can see, after the FOMC announcement, the yield went up, and so the TLT is coming back down and book this trend line here. And also remember we talk about this gang moving averages, and you can see that is converging down on these short-term moving averages, and also keep an eye on these longer-term one to see what it contract and start turning back down. So this is the level that we want to keep an eye on, this 145.15. And for GLD, you can see GLD is converging down here. You see this moving down both below this 164 area. So right now we're going to see would it be able to find some support down at this low here at 160.73. If not, and like I said, I'd be basically keeping an eye on this retest of this double bottom low here under 157. And also for silver, the ETF for silver also coming down and test this support area at this 2042. It got a little bit of a bounce. So we'll see what it be able to hold. If it doesn't, I expect it to make its way down toward this 17 level. If we do see a bounce, watch this trend line here for potential resistance. You can see this long-term and short-term gang moving averages are coming down, expanding downward. So that is pretty bearish. And for oil, USO, the ETF, USO is that's booking out, and you see the expansion of the shorter term moving average, and also the expansion starting to expand on the longer range as well. So definitely keep an eye on the oil. The energy sector is quite strong now. We probably see a little bit of a back test coming back down to this 5120 level, and would continue to look for a little bit more upside. Remember, we're basically looking for crude oil to hit somewhere around $75. And for natural gas, we saw this gap got filled and come down and try to fill this gap, got a nice little bounce here. So we're going to see, remember we were talking about maybe a zigzag down to fill these gap and possibly get down to this 1450 area before we see the maybe a next upside move. So we'll see will this bounce, take out this high, because I'm looking at this a little bit of a topping pattern this evening start. And for the technology ETF, the XLK, see that got a nice bounce off this Monday low, and basically coming back up to this resistance turn support, and also book down. So right now seems like it's finding some support here at this 155.22 area. But again, we're going to see would it be able to hold this trend line here, right? Come up here to see would it get rejected and push back down, or would it be able to break through this trend line and come up to this level up here, this upper trend line at this channel. Now, with the Fed announcing the starting of tapering, and also potential interest rate hike in 2022 and 2023, one would expect that the financial will do well, especially the banking sector. So as you can see on the XLF, the ETF for the financial came up, and you can see that the contraction of the longer term moving average here on the gang moving average, and also the pivoting back up on the short term. So we'll probably looking for this potential 39 level, this high here, to see what it get up here, and see would it be able to break through, or maybe come back down and chop around on this trend line here. So if it comes down here, look for a possibility of trade location to play back up to the upside here on the high here. And for the industrial, it broke down from this balance area, this range here, and came back in. Right now, we're basically looking to see would it come up and encounter resistance somewhere around this 101.50. and see would it get pushed back down, or would it be able to continue to move up and try to test this declining trend line here. And if it could break through that, then we're basically looking to see would it be able to break out of this range and come up and put in a new all-time high. But right now, I'm basically looking for the possibility of turning back down at this 101 level, or this 101 area, to reverse back down, down to here, and then try to break this support here. And for XLE, the energy ETF, we are looking for the possibility of moving up to this 5290 area here. Consumer discretionary, the XLY, watch this breaking out above this 185 area and then come up to this upper trend line here, somewhere around the 188. For consumer stable XLP, we are watching this 7039 support here. See would it be able to find this support and bounce back up to this 7150 area. But if it breaks this support, look for it to work itself down to this trend line here, and also in confluence with the support level somewhere around 6820. And for material, it seems to be bouncing up and down between this level here at the 8051. Basically looking for this thing to come back down and come down to this 77 area, 7680, 7690 area on this trend line here. If it could hold the support, then we're basically looking for it to possibly come back up and might encounter resistance here, because we got this low trend line. So we're probably looking at somewhere around 8270. And for the home builder, we're also seeing a little bit of a test for support here, somewhere around the 7441, 7450 area, and also in this trend line. So watch for a break below this level here. And if it does, we basically be keeping an eye out down here at this 69 area. But if we can hold the support, then we'll see would it be able to work itself back up here. And for the healthcare sector, XLV, I'm looking for this thing to come down to this 129.75. And the utility is broke down from this trend line here, so I'm looking for a continued downside. Could come up and do the back test, but we're basically looking to see if utility is going to work itself down to this 63 area. And for the retailer, I'm basically looking for this to come up and possibly test this resistance somewhere around this 97.70, 98 area, or come down and test this support here down at the 92. If it breaks the 92 support, then I'd be watching for the possibility to come down to this 85, 84 area here for potential support. Looking at the semiconductor sector here, we saw a dip here, came below all these gang averages, and right now it seems to be pivoting back up. So right now I'm basically watching for the possibility of moving back up to this 279, 280 area. I just want to do a little follow-up on the Tesla trade. And if you missed the portion of the video that I talk about this trade, I'm going to have the link on the description below, and then you can click on that and it bring you to the video that talk about the trade that I initiated on Tesla. Right now, we're basically seeing Tesla continue to make its way up toward this my initial target area, somewhere around this 800 level. So essentially looking for to see would it be able to break through this zone and then come up here to the next zone somewhere around 833. And looking at Bitcoin, remember last time we were basically looking to see would it be able to come up here at this 52,800 level. And if it's unable to get back up, then we're watching for it to come down and retest this zone somewhere around the 42,000 area. And if it doesn't hold, then we expect it to see it might work itself back down to this 30,000 level. So right now it seems to be bouncing around this zone here at this 42,000. We're going to see will it continue to move down, or will it be able to chop around and then come back up and make itself work toward this 52,800 level once again. And for Ethereum, we were also looking to see would it be able to come up to this 33,843 area up this zone. Essentially, getting to these low volume zone here. So you can see that it got rejected at this low volume node here, and then came back in to this high volume zone. And right now it seems to be try to come back into this zone here. So if you're unable to get back into this high volume zone, you see Ethereum working toward down to the next zone down here, somewhere around this 2400 level. So that's the look at the Tesla trade, Bitcoin, and also Ethereum. So as you can see, the market is still in a flux and try to find a direction. But with the energy and the financials start perking up, I think the market still probably will make a little bit more toward the upside. And the tech has not deteriorated to the point that this is being sold off. You see on the XLK and the semiconductor sector, the ETF is still showing some upside potential there. So kind of be holding off on calling this thing a getting into a correction level. Remember, we only saw a little bit over 5.25%, from the all-time high down to the last week Monday low, and that was only about 240 point drop. So it's not that big of a deal in when you put it in the proper context here, right? We're talking about the SP500 up at the 45 level there and dropping 240 point. It's not that big of a deal. I mean, not until we start seeing this 10% correction and getting close to this 20%, then we might get some fear in the market and we could start looking at some sort of major correction. But right now, what we are basically looking at, just like the recent past, is all of these small pullback, a few percent here, a few percent there, nothing more until we get down to that 10%. So just keep an eye on it and be a little bit more cautious, because I don't believe that the bottom is going to fall off right now. I think there is still a little bit more of a choppiness toward the upside. So it's going to be frustrating for the bear and it's going to be frustrating for the bull, because that's how it is when the market gets near the top. Be sure to smash that thumbs up to help me promote and share this video. So if you are new to this channel and have not subscribed, click on the subscribe button to subscribe to this channel. That really will help support this channel. Thank you for watching and stay safe.